If you take a step back and think about it, imagine if I asked you to hit a golf ball off a pier and land it inside a teacup. Even if I gave you a million tries, chances are you wouldn't be able to do it. Now, if someone else came along and managed to do it 9 times out of 10, you'd instantly recognize their incredible skill. That analogy is what I'd use to describe what Elon Musk has accomplished. He didn't just send a rocket into space, he sent it up, performed highly complex tasks while in orbit, and then landed it safely on a floating platform in the middle of the ocean. The level of technical sophistication required for that is beyond what most can even comprehend, and yet, he's applied that same brilliance across multiple industries. When we first looked at Tesla, we saw a company at a major turning point. It was approaching its equivalent of an iPhone moment, the stage where a company finds the perfect product that unlocks massive market potential. For Tesla, that product was the Model 3. Until then, Tesla had taken bold risks, refined its technology, and experimented with different models. But with the Model 3, it finally had a vehicle that could compete in the mass market. What we've seen since then is Tesla fulfilling its vision, making electric vehicles mainstream while delivering an unmatched user experience at a price point that disrupts traditional automakers. Now, if you're looking for a company that delivers precise, predictable quarterly results like clockwork, Tesla may not be the best fit. But if you step back and take a 3 to 5 year view, you begin to see where real wealth can be built. And for those who are concerned about risk, Tesla's convertible bonds offer downside protection because they sit above common stock and other forms of debt. That means that even if something goes wrong, bondholders get paid first. To me, that makes it one of the safest bets on what I consider the Edison of our generation. Tesla's impressive growth isn't just a theory. It's happening in real time. For investors, tracking Tesla isn't just about watching stock price movements. It's about understanding the forces driving the company forward. Seeking Alpha remains one of the best sources for Tesla news, stock price targets, and innovation updates. If you want to stay ahead of the curve, check out the affiliate link in the description. It supports the channel while giving you access to expert insights. One of the biggest challenges Tesla faces isn't technology, it's market manipulation. Unfortunately, the common stock isn't controlled by Elon or Tesla insiders as much as it should be. Instead, it's largely influenced by hedge funds that thrive on volatility. If you've ever spent time on Twitter or Tesla forums, you'll notice the extreme levels of hype and negativity surrounding the stock. That's because hedge funds make money by stirring emotions, creating panic, and moving the stock in ways that don't always align with reality. This is why I focus on Tesla's fundamentals rather than the noise. Elon Musk has always been clear about his goals. He sets aggressive targets, works tirelessly to meet them, and while he sometimes falls short, the long-term trajectory remains undeniable. If you compare where Tesla was in 2014 to where it was in 2019, the progress is staggering. Now, if you take that same 5-year view, look at 2019 to 2024, it's clear that Tesla is leading the charge in the transition to sustainable energy. The Model 3 is not just a car, it's a paradigm shift. The moment you sit in one, your expectations change forever. You start questioning why every other car doesn't have the same level of technology, simplicity, and efficiency. Tesla's impact isn't just about making great cars. It's about redefining what people demand from their vehicles. And while some critics may focus on Elon's unconventional style, his results are undeniable. Remember when Apple released the iPod? Suddenly, every other MP3 player seemed obsolete. The same thing happened with the iPhone. Once people experienced it, they never looked back. Tesla is having that same effect on the auto industry. Once people experience an electric vehicle done right, they don't want to go back to gas-powered cars. And here's the reality. Betting against Tesla is not just betting against a company, it's betting against progress. Think about it. What are Tesla's critics really hoping for? That we continue burning fossil fuels indefinitely. That innovation slows down. The demand for clean energy, high-tech vehicles, and sustainable solutions isn't going away. Even if, hypothetically, Tesla ever faced financial trouble, companies like Apple or Google, which have massive cash reserves, could easily step in and acquire Tesla in an instant. Short sellers who bet against Tesla failed to see the bigger picture. This isn't just about cars. It's about energy, automation, and the infrastructure of the future. The moment you realize that Tesla is more than just a car company, you start to understand why its potential is so massive. The energy sector, for instance, is on the brink of major disruption. Tesla is developing software and battery solutions that could transform the way we generate and store power. For years, traditional utility companies have held monopolies over energy distribution. But Tesla is creating a future where individuals can generate their own energy, store it, and use it as they please. With solar panels and power walls, Tesla is empowering people to become independent energy producers. And as this technology continues to advance, it will challenge the outdated infrastructure that currently dominates the energy market. To put things into perspective, upgrading power lines in the U.S. over the next decade is expected to cost around $2 trillion. That's the price utility companies have to pay just to maintain their existing systems. Meanwhile, Tesla is creating solutions that make it possible to generate and store electricity at a fraction of that cost. This is why Tesla isn't just an automaker. It's a technology and energy company positioned for massive growth. We've seen this story before. Investors who bet against disruptive companies like Amazon, Apple, and Google ended up on the losing side. The same thing is happening with Tesla. The company has already captured a significant share of the luxury car market, and as it continues to scale production and improve affordability, it will only grow stronger. The key takeaway for investors is this: when you have a visionary leader, a dominant market position, and consumer demand that keeps growing, you don't bet against it, you invest in it. Elon Musk has repeatedly shown that he is willing to take risks, challenge norms, and push industries forward. And the market has rewarded him for it. So, as Tesla continues to expand its reach beyond automobiles and into energy, automation, and AI, the potential for long-term growth is enormous. Investors who recognize this and stay focused on the fundamentals rather than the daily fluctuations in stock price will be the ones who benefit the most. At the end of the day, the question isn't whether Tesla will be successful. The question is how much more value it will create in the years to come. Those who understand the magnitude of this opportunity will position themselves accordingly.